right, we're here with Sean England with Moreton Insurance. We are here to talk about insurance, a really fantastic topic, riveting topic. But actually, it will be really interesting because we're going to be talking about insurance with franchise systems, and we brought on an expert to talk about that. So, Sean, why don't you just introduce yourself to our viewers? Give a little background about yourself. Feel free to throw in some personal tidbits about yourself.
Yeah, so my name's Sean England. I've been in the insurance industry for about 6 years. The brokerage that I work for is called Moreton Company, and we're our main office is here in Salt Lake. We've got some satellite offices in Boise and Denver as well. We're a large regional firm with clients actually all over the world, and we work with just a vast array of types of businesses and industries and sizes, and whether it's a small one location retail shop or it's an international construction company. We work with kind of everybody in between. Personally, like I said, I've been in the insurance industry for 6 years, and it's actually been a blast. And so when Christian says, a riveting topic, I think it's riveting. I think it's a lot of fun to get involved with companies and get in the weeds and figure out how to actually make insurance work for people. And, whether that's making it work with current insurance products or developing new insurance products. When I'm not, in the office and not working, I've got 3 small kids, 5, 3, and 1. I'm an amateur gardener. I got bit. I don't have a green thumb, but I do enjoy getting out and gardening and trying to grow new things, which is a hobby I never anticipated myself liking. But that's been something that's a lot of fun. So yeah, it's kind of me in a nutshell.
And now you've got the beard to connect you more with Mother Earth. I like it.
Yeah, more in touch with my masculine side.
Yes, exactly. Okay, so let's just jump right in. So a lot of our viewers will, be in the franchise industry, and if I'm new to franchising and I want to know kind of what types of insurances I should require of my franchisees, like what would you say?
Yeah. So the most basic and the foundation is going to be general liability. And within general liability, there are some kind of subsections, subcoverages that may or may not apply, but they just come as part of the package of a general liability umbrella. And those have to do with products and completed operations. So whether you have a widget that you sell or a service, professional service you provide. There's also personal and advertising injury, and that has to do with unintentional patent infringement, trademark infringement, slander and libel that may take place through marketing materials, things like that. Those are subcoverages that come within it. So the general liability by far is the easiest, most common. That's what you definitely need to get for any business. Now, as a franchisor, it's important that you need to have some endorsements on your policy that are specific to being a franchisor, which provide coverage, typically called like a franchisor's E&O for errors and omissions, and that extends additional liability coverages to you as a franchisor for any claims that may come against you for misrepresenting, not fully disclosing, really anything that your franchisee could come back at you for and say, hey, you told me this wrong, or this is what our agreement says, and you're not following through with this agreement. And so that's an aspect of liability that as a franchisor you need to make sure that you have. The next would be property coverages. Pretty basic. Do you have physical assets that you need coverage for? With property insurance, you have to own what you're going to insure. So if you're going to own it, but it's going to be on the premises of somebody else, you can make them responsible for it through a contract, but typically you need to insure that as well. And then if there's that exchange where you used to own it and now your franchisee is going to own it, that just kind of plays into whose insurance policy takes over at what point. Then through it's in almost every state, it's mandatory that you have workers' compensation, and that would be for your own employees. Independent contractors in some states, you're responsible for workers' compensation coverage for them. And so those are kind of the basics of what you would have. If you do have an auto fleet, you would obviously need to insure your autos. And those are the basics that you would need to have. And then depending on what industry you are, what you're in, there's some additional products that make a lot of sense. If there's a lot of data transfer, if there's a lot of storage of sensitive information, you need to make sure you have a cyber policy in place. If there's circumstances where employees are going to handle the property of other people, you may have all the faith in the world in your employees, but you'd want to make sure that you have what's called a crime policy, and that has to do with employee theft. And so there's some sub coverages that, depending on the industry and what your actual model looks like, that you'd want to make sure you have as part of your package.
Sure. And what about like umbrella insurance?
Yeah, so an umbrella insurance, it is a good thing to have because it's actually pretty inexpensive. So that's nice. And the way in which you would want to look at an umbrella is based upon what your exposure actually is. If you're a small shop, or a small location, you're really small, you're whether you're a franchisor or a franchisee, and you just really don't have a lot of exposure, your premiums are going to be pretty inexpensive. But each incident or each occurrence on an insurance policy has specific limits. Typically it's 1 million per occurrence, 2 million in the aggregate for the duration of the policy, the year. If you have a circumstance where $1 million wouldn't be enough for a single claim, or the $2 million would not be enough for the entire aggregate, then you want to look at umbrella policies, which begin at $1 million and increase in $1 million increments. You'd want to look at getting one of those policies to go over the top of your liability policies. So it would cover, you can have them written so they go over your general liability, your professional liability, your auto liability. There's a liability that's associated with a workers' comp policy, and it extends over those. And so it's giving you inexpensive limits to just umbrella over all these other liability coverages. And again, they're not always necessary. If it's a small operation where there's not a lot of third-party exposure, you may not need it, but it's definitely something that should be considered and talked about, again, because it is relatively inexpensive.
Gotcha. Well, I know when I'm drafting the FDD, or I'm consulting with clients on, setting up their disclosure documents, and there is a section about insurance, and it's very easy to look and say, oh yeah, they need this insurance, that insurance, this insurance, but at the same time, you don't want to make it so expensive for your franchisees so that their insurance bill is way too high. I mean, what should a franchisee expect to pay for insurance for a year for all these different kind of policies? Kind of basically what you had said, like 1 million per occurrence, 2 million in the aggregate for like general liability plus auto plus property. We'll just start like kind of with something like that. What would you say is an average range of a premium?
Yeah, so there's so many factors involved, obviously, and this is not a scapegoat answer, and so I'll come back to it if needs be. But there's so many things that go into it, especially what's your industry and what are your revenues or what's your payroll. And so that plays into it so much that it really can range. But I would say it's pretty safe to estimate for a new business operation that's a franchise of some sort to be $3,000 to $5,000 a year, and to maybe help gauge that range a little bit better just through the conversation with an insurance professional is understanding how your premium is calculated. And it's calculated, one, by the industry that you're in. What do you do? Are you a tire shop or a body shop? Are you a restaurant? Are you a bowling alley? What is it that you're actually doing, and what does that exposure look like? Because across the nation, these insurance carriers have aggregated a lot of data on what exposures in specific industries actually are. So they know that a retail store, these are the common claims, these are the values that the claims are, and the frequency. And so we're going to take that information and we're going to generate and come up with a rate in which we're going to multiply the exposure by. And then we're going to say, okay, so we've got the rate, we've got the industry figured out. And now the exposure is usually revenue or payroll. And again, depending on what industry you're in, construction a lot of times is payroll. But revenue is the most common. So they would say, okay, you've got X amount of revenue. If you're a new company and you're expecting, $1 million a year, multiply that by your rate, you're going to get your premium. Starting out, it's going to be fairly low. But if it's an industry that is established, it's a reputable name, hey, I'm going to have $5, $6, $8, $10 million pretty quick out of the gate within the first, year or two. That's obviously going to double your, or even triple your insurance spend, because that exposure multiplied by your rate is what's generating your premium. So again, that's kind of a long-winded answer, but $3,000 to $5,000 starting out, unless you're one of those anomalies that has a much higher risk to your product or to your service.
Okay, no, it's good to know. And I actually didn't know how you calculate premium, so that was an interesting little exercise to walk through.
It's riveting.
Riveting. It's riveting. Like in my spare time, when I'm not in the office doing insurance, I'm reading books about insurance. Okay, so tell me this. Franchise systems, they can do things a little bit different. Like, obviously they can mandate what types of insurance, but they can also mandate, they can approve the carrier, they can require a certain carrier. And so kind of walk us through the different ways of, maybe we'll just start with, the franchisor in the FDD. What it says is these are the limits, or these are the policies you need, these are the limits, and your carrier has to, have a rating of A- or better. And maybe tell us kind of what that means when the franchisor does that, and kind of what are the advantages and disadvantages of just giving the policy limits and saying, go find your own carrier.
Yeah, no, that's good question. So to address that rating, that A- rating or better, what that means is the insurance carrier that you purchase insurance from has a certain financial strength to them. What does their financials look like? Are they a financially secure company? And there's ratings that go down, just like being graded in school. The entity that rates them is called AM Best. But if you have somebody that's A- or better, that's very typical. They're going to have hundreds of millions of dollars in assets. They're going to be very reputable, run really well. Those are the ones that you want to make sure that you have. Now, you could get a B-rated carrier, they typically will cost quite a bit less, but it's a whole lot riskier because you don't know if they're going to be around
Sure.
in 6 months, let alone 6 weeks to end up paying claims. So that's where the rating comes in, the A rated or A minus rated insurance carrier. From a requirement standpoint, or how to structure and say of your franchisees, this is what we're going to require of you, is one, with you'd want to have the conversation with an insurance professional as well as the franchisor, so that you can say, look, these are what the exposures look like from our standpoint in our industry. This is what we see, and this is what we would advise. You put that up in the, you craft the insurance language, so it's complicated and takes another attorney to read and translate. But that structure and that makeup can be really easy as far as very hands off for the franchisor, or it could involve a little bit more. It depends on how the checks and balances of what they want to have take place to make sure that the right coverages are in place. So they could say, here's our insurance requirements. You need A minus rated carrier. Here's the products that you need to purchase and the limits in which you need to purchase them. Go for it. It doesn't matter if you're with Travelers, Hartford, Liberty Mutual, EMC, whatever. We don't care what the carrier is as long as they have this rating. That's less work for the franchisor. What that opens yourself up to, though, is when you receive a certificate of insurance or a COI back to you showing evidence of what the coverages are, it'll show, yes, general liability at these limits, auto liability at these limits. And so it checks the box. But when I talked about at the very beginning how you can endorse or add extra things onto a policy to make sure that they actually provide the coverages for the exposures, a certificate of insurance doesn't show that. So a franchisee could call just a local insurance person, maybe it's a family member or referral or whoever, and they say, look, I need insurance for this. Great, let me plug this basic information into a computer, online rating system, and we're gonna finagle some things so that you get the cheapest premium, but that certificate of insurance is gonna look just how it needs to for the franchisor to not ask any questions or not require anything else. So it's really cutting corners. And where that can really come in and bite the franchisor later is you don't know if your franchisees actually have sufficient coverage for what they should, and you could be left holding the bag on a certain claim. The next one would be if you had a relationship with an insurance carrier and you created a program for your franchisees, and this you need to have a little bit more volume than just a couple locations. But it's important to have a conversation with a carrier and say, look, okay, I've identified the insurance agent that understands franchises. They have relationships and they know which insurance carriers understand franchise relationships. And so we're going to work with a carrier and say, look, we're a restaurant and this is what we do. Do we sell liquor? Do we not? Do we have bands and a dance floor? Do we not? And so you find that right carrier, you can say, look, we're going to grow and here's how it's looking. And this is our projections. And you work with that carrier to create a specific program that caters to what your business exposures are. And then you don't they're not necessarily forced to go with that carrier, but it becomes advantageous because that carrier has put in work to craft a program that's going to be priced better than the rest of the market. As an example, there's a nationwide gym franchise that they've got thousands of locations, and the insurance contract that they have with the carrier from the franchisor level is about 40% cheaper than anything else that the market can offer. So if you buy into their franchise, you can go get your insurance wherever you want. That's fine. But it's advantageous for you to go through this carrier and be a part of their program because it's going to be significantly cheaper. And so it saves the franchisee money, and the franchisor knows I have the right coverages in place. I'm covered because they're part of the program. So it takes a little bit more work for that from a franchisor standpoint to have those conversations with your insurance agent and the carriers to craft that program. But in the long run, it's a lot easier and advantageous that way.
Let me stop you right there. You had mentioned that that's a program for more mature franchise systems, not startups. Is it possible to get something set up from the beginning when you just don't get the discount, or what would it?
Yeah. So it's not impossible. As you begin to have the conversation with the underwriter, with the insurance carrier, and you're trying to craft something from the beginning, some of that information that they're going to want to know is like, one, obviously, yeah, what do you do? What are you expecting as far as your revenues go? What's the business path for this franchise expansion? And from a business owner standpoint, you're going to have your own kind of pro forma of this is what I'm expecting to do, and just being transparent with the carrier and saying like, look, this is what we expect. This is what we want to build. This is what we're trying to build. And so in the beginning, you may not have the volume discount like this national gym does, but you are going to be guaranteed that you have the coverages. And then as you grow, then that starts to say, okay, now we're starting to have enough volume come in that it makes sense. And too often insurance is just seen as a commodity, and companies will hop around from carrier to carrier every year. Sometimes to save $100, which is fine if that's what you want to do, but you lose the opportunity to build a relationship with a carrier who is more likely to do things for you and price things for you down the road, and create things for you. And we call it manuscripting, where it's, hey, we're a unique business. This is what we do. We need to create and kind of expand this insurance coverage a little bit with something that the normal marketplace doesn't offer. And so we're actually gonna have to like write out this new kind of insurance coverage. And so if you have a relationship with a carrier, that's more likely to happen. To go and say, look, we've been with you for 3 years, 4 years. We want to grow with you. We want you to grow with us. Let's have this more of a partnership rather than hopping around. So, just like so many things, when you're starting out as a business, sometimes it's hard to be taken seriously. It's hard to get the group discounts. It's hard to use your volume to get benefits in certain ways. But from a starting out standpoint, that's where I think it's really important. You find the insurance professional that knows franchises so that they can have the conversations with the insurance carriers that know franchises, and you build something together rather than seeing it as this commodity where you just kind of hop around and go with whoever has the cheapest price.
No, that's good. That's good. And I cut you off. You probably were about to start talking about the mandated insurance, like saying, hey, this isn't our preferred provider that you can use. It would be saying, hey, franchisees, this is the provider you have to use.
Yeah. And, in the have to, that can get tricky from like a legal standpoint, and whatever sort of overreach or agreement you have as a franchisor or the franchisee. From if you wanted to, this would be a more rare circumstance, and and it would come down to the structure of the franchise or franchisee agreements and how ownership is shared or split or whatever it is. But there are circumstances where there's master policies that are created where just by being a part of the franchise, there's elements of coverage where you're just automatically pulled in, and that master policy covers you for those things. And it's one really big policy that a lot of people are covered under and have bought into. It's usually one or two specific types of coverage. For instance, this is the way in which FedEx works with FedEx home delivery. If you purchase a route, or your FedEx home delivery route, you are automatically covered into their general liability program, and you're covered. So you, as your own entity, don't have to go and search that out. They've also been smart where they've partnered with a large insurance group and have set up an auto program and a workers' comp program. So they've looked at the exposures of what does a home delivery franchise look like,
right?
GL, where you're automatically covered under the master policy, and then let's have a relationship with an insurance carrier that knows our auto exposure and our auto risk and the workers' comp risk as well. And so when you can kind of, as a franchisee of that, plug into the GL, you're good, and then kind of hey, here's my auto and my workers' comp info, which is information about your automobiles and your payroll information, and it's kind of quick and easy. But that's the way FedEx has built it for that. So there's kind of that master policy component, and then this suggested component. Now, you don't have to get your insurance through their auto and their workers' comp, but there are certain criteria that you have to meet through their going and finding your own insurance carrier. So, and that can create a whole other tangent, a whole other bag of worms that we could get into about, is that program better, or is the standard market and shopping the market better? Because a piece of that comes down to who's managing your program. I know of companies that, again, have their GL in the master program. They have their autos in the special program, but they don't have their workers' comp in that program because the normal market provided, and this is specific to Utah, the normal market provided a better insurance rate on their workers' compensation. So there's bits and pieces that become advantageous on how you want to structure it and kind of put it together.
Gotcha. Okay. Well, I mean, it sounds like the ins and outs of that.
Yeah, and I hope that doesn't make it sound really confusing and like really hard and cumbersome. I think that the most important relationship for, it's important to have the relationship with the insurance carrier, but find an insurance agent that, again, understands franchises and the way they work, so that you can have a lot of trust in them, so that when they come to you and they say, look, here's the market and here's our options, you don't have to spend hours being educated on insurance because you've trusted that person. Just like they're hiring you for the legal expertise. Make sure that you hire an insurance person. Hey, this is my pony. I'm picking my pony. I'm going to ride with my pony. And I vetted them, so I know that when they vet the insurance market, what they're bringing me really is the best option.
Right. No, that's good. That's great. Well, obviously you provided a lot of useful information. What about other tips that you would suggest in picking insurance, or purchasing insurance? Anything else that you want to kind of share with the viewers that we didn't go over?
There's some exposures some insurance products out there that I would say the most common one right now that companies in general, but definitely it relates to the franchisor or franchisee. And if I forget to make that connection at the end, remind me to. And that would be cyber insurance, especially during COVID times when everybody started to go work remote. That industry has seen a massive uptick in claims, and so much. There's so much data now being transferred, and people aren't on this intranet within their own offices, that it's really opened up the opportunity for a lot of, third parties to swindle people out of money. And instances is that like that would be, someone using a mirrored, a fraudulent, but also very legitimate looking email address saying, hey, that invoice that you need to pay, here's the new routing number. We have this new information from our bank. Here's the new routing number. Everything looks legitimate. You've got everybody on your accounting staff working remote. So verifying that isn't as easy. Okay, I just wired off $25,000 and now where did that go? Oh, it was a third party that basically, coerced us and into giving them 25 grand. Yeah. What do you do about that? That's a cyber policy. And a lot of times it is changing now more, but I would say over the last, 5 years, 3 years, there's this assumption from companies that like, oh, I don't have a cyber exposure. Well, if you have data that is stored basically anywhere and it's your customer's information, or you're transferring data and money, you have that exposure. And they're not expensive policies. I mean, they could be $1,000, they might be a couple $1,000, but it's that is one piece of insurance, one product that I would highly suggest people really look into, because again, the assumption that, hey, it would never happen to us, but it's happening all the time. And it's the cliche of it all, it's not if, it's when. I mean, it's super common. And I would say our office experiences a couple claims a week regarding cyber insurance.
Wow.
I can think of for myself in just this year, in the last, 2.5 months, 3 cyber claims that I've had. Amazing. So it's more frequent. So don't discount that. Don't think this. I guess it comes back to pick your pony. Have the trust in your insurance professional that if they suggest something, like, take it serious. Don't just look at the dollar sign. Trust that if they come to you and say, hey, look, this is a legitimate exposure, this is what we're seeing in the industry, allow them to educate you on it and actually have the conversation, rather than just dismiss it as, oh, he's just trying to sell me more insurance so that he can make more money. And if you think that that's the mentality of your insurance person, you should probably find a new insurance person.
Right.
Yeah, so, other than that, as your franchise grows, directors and officers, D&O insurance is one that has to do with the management of the organization, protecting those that are in management roles. Another one that is common to be overlooked is called employment practices liability, EPLI. That has to do with claims of sexual harassment, unsafe work environment, discrimination, and that could be on any protected class. That could have to do with the wages that are offered to employees. So anything that comes from your employee back to you as a company for an unsafe environment. That's another one that's fairly inexpensive, but is very real, and is always in the top 5 most claims. Every year, employment practices is a top 5. And depending on the state of the economy, that those can either increase or decrease in claims. You know, when there are there are often people that are just take advantage of knowing that that's an insurance that'll pay out, and they'll get hired by somebody that usually a small business. They know how to work the system enough to make it appear that it's an unsafe work environment, and then they'll bring a claim against that business just for basically hush money for an insurance company to say, hey, look, this is going to get really expensive because we have, you know, this protected class type of claim coming. It's going to cost us 250 grand. Let's just settle at 50,000 bucks. And so that person knows that.
Wow.
They get hired, they put themselves in that situation. You know, small business owners, they're the ones taking the risk, and they don't necessarily think that like, oh, someone's going to take advantage of me. But it's very real that people will come in just to present this situation and say, hey, I won't file this claim or I won't pursue this legal action if we can just get a settlement check. And they get the settlement check and they leave and they go do the same thing to another small business somewhere else. So it's a very real thing that does happen.
Yeah, very unfortunate thing.
Yeah.
Well, good. Well, I think you've given a lot of great information. Again, just riveting information. But no, it is something that is oftentimes overlooked in the franchise process. And so I appreciate you coming on and educate our viewers a little more, and definitely be able to send people your way if they've got questions about insurance. And so for our viewers, Sean's information will be at the end of this video. You can reach out to me, obviously, to get that information, but I'd love to put you in touch with people that know the franchise industry within the insurance industry. So
happy to be here, happy to help. So I appreciate it.
Okay. All right, sir. Well, you have a good day. Appreciate it.